in this country, you have a second chance and a third chance. And even after your bankruptcy, if you build your credit slowly but surely, after 3 years, you can buy a house with as low as 3 to 5% down. So if you are a first time home buyer, just keep in mind that it's all about your credit, then your income, and of course, down payment plays an important role. But I feel credit is the most important factor. And if you have had issues in the past, you had some issues on your credit, it's never ever too late. Slowly but surely, you can own your own home.
That's right. Okay, so here for the first time homebuyers, we would like to go through the ABCs, the basics again. So there's one question that we always discuss, and it's still there. What is pre-qualification and what is pre-approval? What is the difference? What do you think people should opt for and how it helps them?
So pre-qualification is just a casual talk. It's just a talk. I feel like a coffee table conversation. Hey, how much do you make? What do you think your credit score is? How much money you have in your bank? Okay, having that conversation. What are your minimum payments on credit card? Minimum payments on car? What's your car payment? Okay, based on that, probably you can qualify for a $300,000 home. That's what qualification is. But pre-approval nowadays, I would say lately, 100% of my clients are pre-approved. Why? So there is no element of surprise for the borrowers, especially when you're a first-time home buyer. I feel the most important step before you go house hunting is get yourself pre-approved. In that way, you as a borrower will know what kind of payments you are looking at, how much money you need at the time of closing. I feel there is a big difference between what you can qualify for and what you can afford, or what's your comfort level of payments. I come across borrowers all the time. I'm saying I have funded over $1 billion in loan, thousands of loans, $1 billion in loan, and I still come across clients where they'll say, "Oh, Hussein, I want to buy a $600,000 home, or I want to buy a $400,000 home, but my payment should not be more than $2,000." I'm like, it does not work that way, and that's the reason pre-approval is the most important step, even if you're a first-time home buyer or a seventh-time home buyer. But especially for a first-time home buyer, where we will discuss your credit, your payments, your down payment, how much money you need at the time of closing. So even before you start shopping for a home, you know that, okay, now I'm going to buy a $250,000 house. My payments are going to be $1,800. I need $10,000 at closing. I'm all set to go. So there is no element of surprises. And that's why we emphasize that please get yourself pre-approved before you start house hunting.
So, sir, if someone, let's say they want to get pre-approved with Dream Home Mortgage, what will be the procedure for them?
So, of course, like you said, they can always set up a conference call. It's absolutely free. Consultation is absolutely free. Anywhere in the United States, we can do a Zoom call. I'll go over there. They can email me their last 2 years tax returns, W-2s, most recent current pay stubs. If they are self-employed, depending on which program they want to go for, or whether they can send me their 2 years tax return or last 12 months bank statement, their bank statement for down payment. We will go over with that, discuss the payments, like I said, and then go from there. If they have credit issues, I'll give you an example where I had a client from Houston. His credit score was in the low 500s. I worked with him for a year, over a year, almost 15 months. We got his credit score to high 600, around 680. And then finally, a year and a half later, he was able to buy a house with just 3.5% down in Houston. So it was a process, but he worked with me. He followed all my advices, and then we were able to get him into his dream home.
That's great, sir. So the advices you have given him, I think more people would like to know that. And that brings us to our next point, the credit score. What is the minimum credit limit to work with Dream Home Mortgage, and how people can improve that? How do you help with that? So please tell us more about the credit score.
So if it's a conventional loan, we need a 620 score. Jumbo loans, 680 score. But if you're going for an FHA loan, we can go with as low as 580 scores, sometimes in the 550s. But if you have no credit score because you never applied for any credit card, or you have limited credit, you just have a credit card that is 6 months old and you have no other credit card, we can get you an FHA loan with 3 alternate trade lines and your rental history. Rental history has to be there for 1 year. Plus, we will need electric bill, telephone bill, cell phone bill for last 12 months showing payments made on time. So if you have no credit score because you don't have enough credit, not because of bad credit, but if you don't have enough credit, we can get you into an FHA loan with as low as 3.5% down. So minimum 580 score, or sometimes again case by case basis, no credit score for FHA loan, conventional loan 620 scores.
All right, sir. So, moving on from credit score, we have one question that we are always asked about the down payment. Because, if you're talking about the first-time home buyers, this is the main step for them. This is where they want to know that what are the options available to them, how much they have to have in hand for that first step, to take that first step. And if there are any grants available, if there is any option available for them to help them out with the down payment. So what do you have to say about that?
So there are some down payment assistance programs based on your income. There are some programs where you can go for down payment assistance. FHA loan, you can go with 3.5% down. Conventional loan, all the way up to 760,550, 766,550, you can go with 3% down. FHA, 3.5% down. For our veterans, if you all are on the show, or you all are on the webinar, thank you for your services to all the veterans. They can go with 0% down. And then jumbo loans, as we speak, again, I like to give this example. We are closing a client who's buying $1 million home with just 5% down. And there are clients who are buying $200,000 home, but they want to put 10 or 15% down. So it's always going to be case by case basis. But I definitely want to clear something where a lot of clients call me that, hey, they went to their bank, they are on some kind of work visa, or they are on DACA status, or they filed bankruptcy 3 years ago. They were told that they have to put 20% down, or they are a first-time home buyer. They have been told they have to put 20% down. That's not the case. You can, if you qualify, if your debt to income ratio is in order, then you can go with 3% down or 3.5% down. So it's always going to be case by case basis. But the rule of thumb is first-time home buyer, primary residence, FHA, minimum 3.5% down, conventional as low as 3% down. For our veterans, 0% down.
That's great. So this is why you come to Dream Home Mortgage, because we are not gatekeeping any secrets. We are here for you if you need help with anything. And I see some questions pouring in already. So thank you so much for your questions. We'll get to the question answers by the end of the session. Please stay tuned. Thank you so much for joining us again, all of those who are joining now. So we were talking about the first-time home buyers program, and now we will move on to the next stage of our webinar. But if you have any questions related to first-time home buyers, if you are a first-time home buyer and you'd like to connect with Dream Home Mortgage for your journey, you can contact us at info@dreamhomemortgage.com. Our contact number is also there. You can always visit our website, www.dreamhomemortgage.com, and you can book a 30-minute free session over there. So now moving on to the next step. So for the past few weeks, I've been getting a lot of emails about the interest rate switch. There is a lot of speculation about what is going to happen. Is this the right time to invest? Will the interest rate drops further? What is happening? And then there are emails about refinancing. People say that this is the perfect time to refinance. We've had a webinar about refinancing last month as well. So what do you have to say about this? Do you agree that this is the perfect time to refinance, and why should one go for that?
So is it a good time to buy a house? If you are renting, it's always a good time whenever you are ready. Don't try to time the market. And this is an honest opinion, honest, heartfelt comment. If you are a first-time home buyer, become a homeowner faster than renting, sooner than later. That's my thought process. Secondly, we are expecting a rate cut next Wednesday, 6 days from today. Uh, Most of them are saying 1/4%. Few of us are hoping for 0.5%. Uh, I feel 0.5%, but I'm in the minority. Most of them are saying 1/4% rate cut. Who should refinance? Any of you guys paying rates higher than 6.5, 6.75? Again, I'll give you an example. Today, I was comparing my client's rates, and his loan amount was 449,000. His rate was 7.5. When I was able to compare rates at 20 years, his payments were $9 lower, $9, but he was shaving off 9 years of the loan, going from 29 years to 20 years. But his goal was, for the time being, to have the lowest payment possible. So when we compared apples to apples, 30 years loan to current payments, his payments was dropping by almost $437. This I know because I just gave that illustration literally a couple of hours ago. So that's $400 a month, $4,800, $60,000 in 5 years. That's savings, net savings for him. So why wouldn't you refinance? Yes, if you want to wait further, it's all about speculation. But at least I feel that if you are saving more than $300-400 a month, make the move now.
That's right. Okay, so thank you. So moving on to the next question, people who want to know more about refinancing, there are two terms we commonly hear about refinancing. We hear about rate and term refinancing and cash out refinancing. What is the difference, and what is the criteria that what should one go for?
So basically, when you are planning to refinance, like I just gave you an example, your main goal is just to reduce your payments, reduce your interest rates. Sometimes I have clients going from 30 years to 15 years. So their main goal is dropping their interest rate, even though the payments might go higher. Like I said, I have clients going from 7.5 to 5.5. Clients dropping from 6.99 to literally 5.25 and going for 15-year loan. So main reason to refinance is to lower your interest rate. That is the most common reason. There are other reasons, dropping someone who has co-signed for you, going through a divorce, but that's literally 1 out of 10,000. Main reason is lower your interest rate. Cash out refinancing. The way it sounds, cash out refinancing. You are taking cash out from your home. And the number one reason people do that is to pay off their credit cards. And I encourage people to do that. Sometimes I come across people like, hey, Hussein, why would someone borrow a loan and go for a 30-year loan when they're going to pay off their credit card in 5, 7, 10 years? It's always the sign of the time. If you have equity in the house, but you are struggling or you are stressing out month after month to make your car payment, credit card payment, and here you're sitting on 40-50% equity in the house, why will you not refinance, get that cash out, pay off your credit card, pay off your car payment, and just have one mortgage payment? I have had clients where they have increased their monthly cash flow almost by $1,800 to $2,800, $3,000. And they're like, literally, and again, they have called me like, Hussein, thank you. We were not very confident. We were not sure about this. But 3 months later, we can breathe easily. We don't have to stress about which payments to make, juggling between paychecks to paycheck, which payments to make, this credit card minimum payment. Okay, this car, I'll make this month payment, this week, this paycheck, I'll make this car payment. Cash out, sometimes I honestly believe it can be a blessing for those of you who have high credit card debts. The other clientele, what I've seen, they have done cash out on their investment property. They have paid off investment property. They'll take that cash out and go and buy additional investment properties. So now they are putting their money to work for them. So there are different reasons. I have clients who have got cash out for medical reasons, unfortunately. And then I have clients who have taken cash out to buy another business. So it's always going to be case by case basis. But I feel if you have enough equity and you are one of those borrowers that have high credit card debts, car payments, student loans, you should definitely think about getting cash out, paying off those credit cards.
Oh, that's right. So definitely, this is why you always talk about that this home is not just a home for you, it's your equity, it's your future. So in the time of need, you can always count on your home. So this is why we encourage you for your personal home, for taking that step towards home buying. And as we said that this is a speculation about the interest rate, so this might be the perfect time for you to refinance. If you want to know any further information about refinancing, you can always reach out to us. Now, so that we can see the difference in the rates, we can see that these are fluctuating. What do you have to say about the foreign investors? Is this the right time for them to invest as well?
So at least I can tell you about some of the hot markets like Texas. We know South Carolina has been really hot lately. But when the interest rate starts dropping, the house prices start going up. That has always been the case. I'm talking about last 27 years. Whenever the rates are right now, at least a month ago, we were at 22-year high interest rates, 22-year high. Yes, definitely the housing market has slowed down, but we are seeing activities because the rates, if you compare to first week of June, the rates have almost dropped by 1.5% in less than 10 weeks. That's a big drop. Now, if you're a foreign investor, if you want to own some property in the United States, you don't have to have a social security number. You can be sitting in Singapore, you can be sitting in somewhere in Africa, or you can be sitting in Middle East or somewhere in Europe, but you want to buy a house. People will think, oh, it's very difficult, very complicated. No, as long as you can put 30% down. Yes, the interest rates are high, the closing cost is high. Want to be very transparent about that. But you can own a home with 30% down. No questions asked. As long as you have that money sitting in a bank account and you're able to wire that money into title company at least 5 days before closing. So I feel for foreign investors, if you are planning to send your kids to United States for further studies, or you just want to own some kind of real estate, especially a home in the United States, it's a great program for foreign investors.
Sir, any particular states that you would like to suggest?
I live in Texas, so definitely Texas. Texas, I feel it's still, the value is there. It's still a growing state. There is always appreciation. North Carolina, South Carolina, Florida, Virginia, and of course California, but California is really expensive. Now, one thing I want to clear about foreign investors, if they ever think about buying or investing in the United States, then when you try to sell that property, and I want to make sure they're aware of it. When you are a foreign investor and you try to sell that property, the title company will hold 15% of your sales price. 15% of your sales price. So let's say you are selling a property for $300,000. They will hold $45,000 out of that and send that money to the IRS. But when you file your taxes, whatever your actual tax due is, that money will be deducted from that money that IRS is holding, and the rest of the money will be refunded to you. So it's a very transparent process. But yes, when you are selling that property as a foreign investor, the title company is obligated to hold 15% of the sales price and send it to the IRS.
All right, so thank you for sharing this information. So thank you so much, everyone, for sending in your questions. If you have any further questions, please keep sharing them. So we have received 2 questions via email because we had asked our audience that if they have any questions, they can email us at info@dreamhomemortgage.com. So there are a few questions. If you want, I can include these questions now, or is there anything you'd like to add?
One thing again I wanted to add further is now Dream Home also does commercial loans, and we also are working with reputable, dependable commercial investors, where you can just invest with with those investors, just be part of that group, and over a period of 3 years, 5 years, your return on investment can be anywhere between 18 to 24, 30%. So now we are venturing into helping our clients, help them to invest into this different kind of investment opportunities, whether it's an apartment complex, whether it's an office building. So you are not directly investing into that apartment complex, but you are investing with that builder or that management group, and then it's all black and white. It's all written in a contract, and then you get your returns. Probably sometimes we actively were managing a group of investors where it's a three-year investment holdout, and then after 3 years you are almost guaranteed around 22% return year over year. So now Dream Home is helping investors also to invest their money. Plus, if they are looking for commercial loans, whether they are trying to buy a land, they're trying to build a shopping complex, we can help them acquire a loan for anything and everything. So basically, anything and everything to do with real estate, Dream Home can help you.
That's right. Dream Home is your one-stop shop for all of your real estate needs. Whether you are a first-time home buyer or you're looking for investment opportunities in a second property, you want some commercial loans, or you're looking for refinancing, or you're a foreign investor looking for an investment opportunity in the United States, Dream Home Mortgage is your place to go, and Mr. Hussein Panjwani is your man to go to, and you'll definitely get the greatest advice you could ever imagine. And I am sure the families that you have worked with, they agree, and they testament to your honesty and the trust that you have developed with your community over these years. So thank you so much for that service, sir. And now I'd like to include a few questions. There's one question that Srikant Rao has asked, and it's about pre-approval. So the question says, hello, Mr. Hussein Panjwani, please let us know the steps that involve in pre-approval and also the criteria that needs to be met with to get a mortgage loan approval for first-time home buyer.
So like we discussed in the beginning of the show, you need to remember the acronym CIA. CIA.
That sounds dangerous.
That's scary sometimes, but that's what mortgage is all about. CIA, credit, income, and assets. So when we get you pre-approved, first of all, any of you listening to the show, they can call me tomorrow. They can set up an appointment. The consultation is absolutely free. You're not obligated to use my services after pre-approval. I hope you do, but if you don't, it's not meant to be. But when we get you pre-approved, we will go over your payments. We will look at your income. So your credit and your income plays a very, very important role, because based on credit, of course, when we look at your credit, we will know what liabilities you have. And once we look at your liabilities and look at your income, based on that, we can qualify you and we can pre-approve you for a certain loan amount. And remember, listeners, when we qualify you, we have to include your principal, your interest, your taxes, insurance, mortgage insurance if you're putting less than 20% down, HOA, homeowners association. So that becomes your house payment. So your house payment consists of principal, interest, taxes, insurance, mortgage insurance, and HOA. So once we calculate that, we add your car payment, credit card payment. Are you paying any child support, alimony, or do you have any IRS payment plan? We add all those up and determine your total debt to income ratio. And then based on that, we issue you a pre-approval letter. So first we check your credit, look at your income. Based on that, we will issue you your pre-approval letter.
All right, sir. Thank you so much for, I hope this answers your question, Srikanth Rao. If there is anything that you did not understand, please feel free to ask again. So the next question that I'd like to include, we received it by email. This is from Dev Lenka. The question says, hello, can you please provide an estimate for refinancing for credit score 709? I'm looking for refinance.
Okay. So again, not trying to dodge the question, but the credit score, your debt to income ratio, that all will play a very important role. The value of your house. So how much equity you have in your house, and what zip code you are, what zip code where you're living. So all these play a very important role. If you can send me your mortgage statement, all of you listeners, if you are trying to refinance, I'm not going to pull your credit because I don't have your uh, social security number, and I will never pull credit without talking to my borrowers. But if you want a fair comparison, what are your payments going to be, what your payments will look at like when after you refinance, you can email me your mortgage statement and just put in a line, hey, this is my credit score. That's all. And primary residence or investment property. So once you send me, you can email me your mortgage statement to info, INFO, info@dreamhomemortgage.com. It's right on the slide. I can see info@dreamhomemortgage.com. If you can email me your mortgage statement, your contact information, and your credit score, and please clarify whether it's your primary residence or investment property, because I did mess up today. This morning, I quoted someone a rate on a primary residence because he just emailed me his mortgage statement and he got all excited. And then I'm like, then he said, oh, by the way, it's my investment property. So the rates were 0.5% higher. So that's, I want to be very clear about it. So if you can email me your mortgage statement, your credit score, and whether it's your investment property or primary residence, we can send you actual payment comparison that, hey, this is your payment for 30 years. 20 years has become the flavor of the month. I am pleasantly surprised the number of people opting for 20-year loan. We always hear about 15-year and 30-year, but lately, some of my clients are opting for 20-year loan. So we can send you those payments, and then you can decide whether it makes sense for you or not.
All right. Thank you. I hope this answers your question. I want you, if you're here in this webinar, please reach out to us and you can send us your details at info@dreamhomemortgage.com, or you can call us. All the details are here on the slide and in the chat box as well. Now, the next question that I'd like to include, we also received this via email. Sir, the next question is from, the name is not mentioned like that. Yeah, it's Anthony. So the question says, I'm looking for cash out refinance with a fixed rate and most likely FHA, which will allow higher income debt to debt ratio.
Higher debt to income ratio.
Yeah, you can consolidate all bills with the exception of my vehicle. My current mortgage FICO score is 697. Property value 340 to 360K. Balance is 176K. 70K cash out 70K cash out fixed rate 30-year. No prepayment penalty. No or little closing costs are to be working too long depending on figures. My existing monthly high interest bills exceed for more than what a payment on 70K would be. Current income to debt ratio is almost 46%. Should you have a loan program that meets these conditions, please email me. And
so same thing, this particular borrower, he has a lot of questions, or she has a lot of questions. So if she or he can please email me their scenario, I will really greatly appreciate it. I will call them, we will go over the scenarios, and then we can go from there.
All right. So we are going to get back to you. We want to talk to you in further details. So we will get back to you. Thank you so much for sharing your details with us. So the next question we have is from Anil Rao. The question says, do you guys offer any special benefits that would give us an edge in this competitive market?
Can you please repeat the question, ma'am?
they want to know why they should choose you. They're saying that what special benefits do you guys offer that give us an edge in this competitive market?
What special edge? Uh, Honestly, I don't want to give you any false hope, but we have been in business for 20 years, 27 years. So there is no element of surprise at all. We try to be as competitive as possible in our interest rates. That has been the key to our success. That's what I feel like. So, and if you read some articles, there are a lot of surprises with mortgage companies, and I'm really proud that in 27 years you will never hear or you will never see a review that they saw some shocking closing cost or surprise at the time of closing. So we make sure, because we believe and we know that buying a home is one of the biggest commitments of our lives. Think about it. From your paycheck, you are committing the biggest dollar amount towards your mortgage. The term of the loan, 15 years, 20 years, 30 years. Sometimes marriages don't last that long, but your house will be there for 15, 20, 30 years. So we want to make sure that you get the best deal, you enjoy, and whenever you write that mortgage check, you have a smile on your face. Not that, hey, Hussein got me this deal, he took me for a ride. We never ever believe in that. So the edge is basically we will make sure you get the best deal in town, and there will be no element of surprise. There will be absolutely no surprises. Now, again, when people talk about refinancing, we hear this magic word, no closing cost. It's always like no closing cost. Like my wife has that smile when she sees a 5 carat diamond ring. Same thing, like no closing cost, right? But there are no free lunches. I want to make it very clear. So I explained that in our previous seminar also. So there are three options when you talk about refinancing, when you talk about closing cost. One is you are not paying any closing cost out of pocket. So they advertise no out of pocket closing cost, no out of pocket closing cost. So sometimes some of the clients, they're like, no closing cost. I have had clients where they will argue with me that, hey, Hussein, I'm getting this interest rate with no closing cost. But when they send me the statement or the closing cost worksheet, the closing cost has been rolled into their loan amount. So the loan amount has been added to the the closing cost has been added to your loan amount. So that's called no out of pocket closing cost. The second option is no lender fee. So the lender is not charging you any fees, but there are still title company fees, appraisal fees, and all the third party fees involved. So your rates won't be the lowest, but it won't be the highest. And the third option is no closing cost. But when we say no closing cost, you are trading off with a higher interest rate. So simple formula. All of you guys who are planning to refinance, wherever you shop around, it's good to shop around. But remember this thing, lower the interest rate, higher the closing cost. Higher the interest rate, lower the closing cost. Very simple formula. So there are no free lunches. Keep that in mind, listeners. Like I'll give you an example. Today, I was quoting someone a rate of 5.5 for a 20-year loan, 5.5 for a 20-year loan. And his loan amount was around 400,000. In fact, I just gave that example where his payments were almost going to be the same. His closing cost was around $4,800, which he wanted to add to the loan amount. First, he wanted to go for a no closing cost loan, but then he decided to go with closing cost because he wants to keep the house for a longer term. So it's always going to be how long are you planning to keep the house? Whether you want to you prefer paying the closing cost or taking the lower interest rate, or trading off with a higher interest rate and paying and adding no closing cost to your loan. So it's always a trade-off between closing cost and interest rate. Please, listeners, keep that in mind.
All right, thank you, sir. So the other questions, I feel like they're giving their information like the ones that we received in the email. So we are going to get back to them via email so that we can get in touch with them closely and
Any,
we know
any
their
of you guys, who have a particular scenario or need a specific interest rate, email me at info@dreamhomemortgage.com. We will try to get back to you as soon as possible. If you just are a first-time home buyer, you want to set up an appointment, you can go on our website, you can set up an appointment or call us tomorrow morning, 972-245-5626. But if you have any specific scenario, specific interest rate, the best way to communicate is info@dreamhomemortgage.com. And you're always welcome to call us at 972-245-5626. That's 972-245-5626.
That's right. So now the other question that I'm going through. So Anwar Hussein is saying, I feel like I'm late. Did I miss it? But he sent it around 5:58. Yes, sir, you were a little bit late, but I hope you caught up with what we were explaining. And if there are any questions, you can always approach us. And then another question from Gaurav. That he would like to contact. Yes, you can always contact. So if you want to get in touch with Dream Home Mortgage, the way is right there. You can contact us via info@dreamhomemortgage.com. It's mentioned on the slide. It is there in the chat box as well, the contact information, the email address, and the contact number as well. So you can reach out to us whether you are in Texas or you are in any other state. And thank you. Very informative webinar.
I saw someone asking us about question about I'm drawing a blank, but anyway, the question I just saw someone asked about reverse mortgage.
Yeah, so we have to wrap it up in about 2 minutes. So if you can just quickly go through the reverse mortgage.
Reverse mortgage, again, if you are 62 or older, instead of you paying mortgage to the mortgage company, they will give you money, but you have to be a senior citizen. You have to qualify. Now you have to actually qualify. You have to make sure that your payments, you can afford to pay back the taxes and insurance. So reverse mortgage is for senior citizens. Of course, you have to qualify. There is a formula that you have to qualify based on that formula. So if you are a senior citizen or you think you can qualify for a reverse mortgage, same drill. You can call me at 972-245-LOAN, 972-245-5626. Or again, email us info@dreamhomemortgage.com.
That's right. Our doors are open for you. Thank you so much, everyone, for joining us today, for all your questions. I hope if there is any other thing, you will. We have, we broke the ice, and now you can easily reach out to us. If there's anything you'd like to know, as Sir always says, that it's based on case to case, on your situation. So it would be better if you reach out to us, and we can give you more insights, and we can guide you better if you reach out to us. So thank you so much today for joining us. Thank you, sir, for joining us today.
Thank you to all of you guys for logging in for this to this webinar. I know, again, it's almost 8 o'clock. In some states, it's 9 o'clock. So I really appreciate it. And again, thank you for hosting us, and all the list and all of you guys for logging in. And do give us a feedback. Let us know if next webinar what you want us to talk about. Yes. Always open for suggestions and open to feedbacks. So once again, thank you guys. Thank you for tuning into the webinar.
Thank you so much, everyone. Good night.